Hey everyone, Brian from Maribel Traders here. It is March the 3rd, Wednesday, halfway through the week or more than halfway. And let's start out by looking at interest rates. You can see here on the treasuries, they're all up today. And I wanted to start out with these because that's what I think's obviously going on in the market. We have been talking about this for probably a month or two about how these interest rates have been creeping up, and at some point they are going to make a difference. And we did get a bit of a pullback over the last couple of days, but now we're heading higher again. So, and the market's responding accordingly. So we'll see where it goes from here. Might be putting in a double top on the rates, or we may be going higher. Regardless, it does have the markets on edge right now. So let's just take a look at the markets. Speaking of the markets, transports, actually not a bad day on the transports, even though we had a pretty significant down day on some of the indexes. You can see here the transport's only down 0.17% and still looking pretty strong on all the indicators. So transports have not really started to roll over yet. We might be putting in a double top here, but moving averages are still heading higher, and it could be that we just churn sideways. That's another possibility here instead of rolling over. So, I think kind of that's my overall sort of feeling right now on where we're going. So you can see here the 10-year yield obviously creeping up again. I mentioned this pullback as I felt it was just going to be a pullback like we had here, like we had here where we got really extended from the moving averages. We were overdue for a pullback, so we did get that. And let's just see if we make a lower high, maybe come back more into this moving average, or if we just continue to push higher. Should be it'll be interesting, and of course it'll affect what direction the markets go. Because if we get more of a pullback, markets probably will flatten out or start to try to head higher again. So a lot depending on those yields, as I keep saying, you got to keep watching them to see and get an indication of where the overall markets might be going. So looking at the Dow, not down that much today, 0.4%. Again, we've put in a lower high here. We're back. We've lost the 20 moving average. We're back into sort of this level of prior resistance, which should be support now. So just keeping an eye on that. I'm guessing we're going to bounce a little tomorrow. We'll see how things play out for the rest of the week. But stochastic starting to turn up. We are pretty oversold, and not seriously. IWM took a bit more of a hit. That's a 1% loss today. Lower high on the RSI. We did so on a bit more volume than the previous 2 days. Stochastics still turning up, but below 50, so that's always a concern. Stochastics are lower, that usually means they're below 50, usually means rallies do fade, and we had this top here, double top, and now we've had sort of 3 successive lower tops. So again, we may be just setting up to churn sort of sideways here for a while. Again, depending on what interest rates do. The Qs, as I've been mentioning a number of times in my videos, the Qs, the growth stocks, the tech stocks with the high PEs, typically do not do well in a rising interest rate environment, and you can see what's happening here. We definitely are rolling over on the Qs. We kind of make a topping pattern here, lower high, really sold off, and then sort of tried to bounce in this area and just having some trouble. So we're back into an area where we should see some support. Here's resistance here, tried to break out. We did break out, support, I guess, and then it's higher. So we'll see if we can hang on to this level tomorrow. You can see the selling was on volume, so this isn't just mom and pop selling. This is institutions as well that are getting out of these tech stocks. And you can see here we're pretty oversold, or getting into very oversold. So if we get a dip down, I'm going to keep an eye on the stochastics. You can see here where we've dipped down, dipped down, dipped down, into really oversold territory. We do get a nice bounce. We're not quite there yet. So maybe another day or two of selling, and we might get into that range where we can maybe try something to the long side. SPY, you can see here, SPX, the 500, S&P, we're right back down on this 50 where we found moving average, where we found support before, here, and now we're back there again. We'll see if we can hold on to this again tomorrow. We were down 1.33% today. Again, stochastics below 50. Rallies tend to fade. RSI is still heading lower. See if we get a bounce tomorrow. Kind of feel like we should get one. And the dollar kind of an inside day, gapped up. It looked like it was going to roll over again, but it gapped up, and we had a pretty strong day overall. So the dollar strength. And the VIX took a big pop today, obviously, with the markets down, which is what you would expect. And we're kind of just sort of range bound here, kind of stuck between sort of 29 and 22. And we'll see where it goes tomorrow. If we do get a rally, this will pull back again, obviously. So a bit of a teeter-totter up and down, whipsawing. So let's go over the candles at a glance here with the sectors. You can see here, of course, we talked about the SPY back down on this 50 moving average, and the discretionaries are really taking a bit of a hit as interest rates go up. You can see here we've had a real hard sell-off on the discretionaries, worse than the SPY, probably one of the worst ones, other than as well as technology here. Industrials well off the highs of the day. Materials well off the highs of the day. Energy and financial seem to be the ones that ended up green on the day. You can see here. I knew we didn't have a great oil report, but yet energy still seemed to eke out a gain. And again, I think it's a recovery play. Expecting later in the year, we're going to have a very strong economy. Energy consumption is really going to go up. And of course, energy demand should bring higher prices with fuels. So I think there's something to be said here, the energy play about recovery. Again, the financials doing well in a rising interest rate environment. Although I will say if we do really seriously roll over on some of these indexes, you will see the financials drop with that, even if interest rates are rising, because everything will get dragged down. At that point, they'll just be selling everything. And you can see here utilities, of course, really doing poorly. Same with real estate. Again, rising interest rate environment, not the place to be in terms of a sector. Even the staples have been taking a bit of a hit here, which is kind of surprising. This typically is a defensive sort of sector. So end off with a quick look at some stocks I'm in right now. So BCRX still in some of this. It seems to be just hanging in there. Had a green day despite the markets. And DBA still in a little bit of this. I did take some of it off. It is pulling back. If we get a bit of more of a pullback back to this 20 moving average, I'm going to add that back again because inflation is in the economy now with food, and the food commodities are going up. So I think it's just getting sold with the rest of the market. And I'll be looking to add back to my position if we get down to that sort of 17 level, which we're not far off of actually. So maybe tomorrow. Ford's still in that for the long term. Again, this is a January 2022 play with options or leaps. GRTS, disappointment, got into this yesterday. Looked like it was going to break out here. Had a catalyst with some meeting that they were presenting at next week, and yeah, I had a big sell-off today, so I had to stop out of that one. IPOF got out of this one. Again, don't want to be in technology when everything's getting sold with the technology stocks. KRE still in a little bit of this. Looks like it's putting in a double top here. I mentioned before, if everything starts to get sold off, financials will go along with it, but I still have a little bit here. New Skin took some off on Monday, and on this pop here, and now we're just waiting to see where it goes from here. Had a big sell-off today with everything else. so I'm down to a small size on NUS. Willow I'm still holding. Kind of wish I'd sold up at 2, but I kind of just still holding that one long term. So later in the year play probably. WWE, as I mentioned in my weekend video, I was going to take some off. Got a pop, and sure enough, we did get a nice pop Monday, Tuesday. Took some off here over 53. Just have a little bit left, but I still like this one. I think it's a recovery play. All the recovery trades today did fairly well. If you looked at CCL, that was, I believe, green on the day, and if you looked at the airlines, a lot of the airlines were green on the day. So a lot of hope in the back half of the year for a strong economy with energy prices and some of those recovery trades still looking pretty good. Let's look at CCL, for example. While we're talking about that, you can see here gapped up today. Of course, more good news on the vaccine front, and yeah, so some of these recovery trades are still doing fairly well, regardless of what the rest of the market's doing. So, uh, so that's it, everybody. Hope you all had a good day today. And as usual, we've got a new segment now. Jared starts the pre-market show at 8 o'clock, where he goes over sort of what's going on in a big picture on the markets. And then at 8:30, we start out drilling down and looking at what's in play today with usually Norm and Carlos. And then after that, we trade the market open at 9:30. And this is my book on Amazon, How to Swing Trade, if you haven't checked it out. So hopefully we'll catch you in the room at some point tomorrow. And have a great rest of the evening, everybody. Bye for now.